Okay, so one of the stocks that I've been publicly bullish about, Uber, just reported their earnings today. The stock was up around 6% on the day, but then after hours, we dropped around 4%. So clearly, maybe there was some bad news in here. Market cap right now sits at like 117 billion, less than that now after the after hours drop. But I think that this is going to be short lived, and even if we do see a pullback, investors are going to gobble this one back up. You can see last year, the stock has pretty much just been up, up, and away ever since its lows back in March of last year. So almost a year ago now, around just under $15. We are up a massive, ready for this? 326% on this giant. I remember the days when Uber was around $50-60 billion market cap, and I was like, this looks like an opportunity. So I loaded up quite heavy back then, and these shares are now up over 100% for me, after all my cost basis and all that stuff is factored in. But today we're talking about the earnings. I'm going to give you my quick thoughts on this. So Uber EPS beats by 1 cent. They miss on revenue though. So your EPS comes in, Q4 GAAP EPS of a negative 54 cents, beats by a penny. Revenue was around 3.17 billion, which is down 15% year over year. A pretty significant miss, around almost $400 million. Gross bookings were actually 17.15 billion versus consensus 17.2, so a miss there. Trips were 1.44 versus 1.369, so a nice beat there. And monthly active platform customers was 93 million versus consensus 92, so a nice beat there. So overall, kind of a mixed report. I would say more on the bearish side, if you will. You know, there's more negative news here than positive news, but this is all hindsight. We got to look at the future. We got to look at some, metrics that I kind of specifically noticed in their earnings report in the investor presentation, and that's what I want to go through with you guys right now. But before we do, guys, take a second, hit the like button, subscribe if you're new to this channel. We want to hit 1,000 subscribers before the end of the month, and I know you guys can make that happen. Okay, so housekeeping out of the way, let's talk about a few things from their investor presentation. So Uber, if you're not familiar, they have 3 segments related to their business: the mobility part, delivery part, and something called freight. So mobility is where most people got familiar with this app, or the Uber rides. And delivery is something that has picked up tremendous success in the last year. We'll see that in a second. Food delivery, that kind of stuff. Freight is something that not many people are looking at yet, but I want to point out something that they've showcased in this presentation, which maybe you should pay a little more attention to freight and Uber as a whole because of that. And here you can see a nice breakdown of Uber, kind of quarter over quarter, nice steady increase ever since they got hit last year. And things look to be coming back very consistently, very strong. So this is when they actually got impacted last year. And then ever since then, it's just kind of been a slow and steady increase ever since. And you can see here their adjusted EBITDA has also slowly crept back up. And year over year, we're actually looking pretty good now. Okay, so now what I want to show you guys is the slide. You're going to see in a second, Uber today, they talk about their massive opportunity. And this is just mind-blowing. So remember the 3 segments of their business: mobility. The total addressable market here is $5 trillion. Delivery, another $5 trillion. They're getting into grocery as well. And then freight, this is no slouch. This is a $3.8 trillion market with global trucking and logistic costs. And this is something that Uber can capture a nice portion of as well over time. Altogether, this company has nearly $15 trillion of total addressable market that it can capture over time. Now, of course, it's not going to be able to capture all of it. There are competitors and all that stuff. But because they're a global company, they have massive potential. If you look at their market cap, like I said today, $116 billion, this is peanuts compared to what the potential is. Even if they capture, 10% of this market, there's a lot more upside. So I just wanted to kind of throw this quick calculator up here. 10% of this massive market would actually equate to around $1.38 trillion market cap. So yeah, that would pretty much be like a 10x for this stock from where it is today. So can Uber 10x? We're asking this question for every stock these days. The answer is yes. They have the market and they have the potential to do it. Now, jumping back here, they kind of break down quite a few things, their mobility. I'm not going to go through every single thing here, but if you're a shareholder of Uber, take a few minutes to look through this. They talk about their gross bookings here for mobility. It was actually a pretty good quarter. And you can see while it is down year over year for mobility, this is with everything that's going on right now, with a lot of regions still kind of locked down or in restrictions. So, back half of this year into next year, this should be very strong, and this should kind of uptick and start going higher once again. A couple other things that they showcase here is their membership. So this is something that Uber has been pushing quite a bit in the last few months. They started these passes. I'm not sure if you've ever used their apps. You probably noticed it, especially with Uber Eats. They have an Eats Pass, they have an Uber Pass, and pretty much the idea here is to gain subscribers paying monthly to access the service for, benefits, discounts. And this has now grown to 5 million members. The last time they talked about this was around 1 million. And after listening to their earnings call, they expect this number to be quite significant by the end of this year. So I'm thinking at least 10 million plus. So it's going to be, a pretty significant jump up here, and it's going to keep accelerating over time, because it's kind of a win-win situation. Uber gets these loyal customers now that are on a recurring, subscription plan, and how much the market loves subscription. And then riders get benefits, like they get unlimited free delivery for Uber Eats, and there's some benefits for Uber rides as well. So it's kind of a win-win situation. Of course, it's going to cost Uber money in the short term, but the idea is over the long term, this will be a cash cow for them. The other thing they're really focusing on right now is redesigning their app. They call it I don't know what it would call, like the ultimate app or the super app or something like that, right? And it's pretty much going to be an app that has everything in it. It's going to be very user friendly, and this is something that they're really working on pushing probably sometime soon. My guess would be like we'll see it at some point this year, probably by summertime when things open back up and people start getting back out. So I'm excited for this as well. People already like the Uber app, and I think integration between the services that they offer now that they do delivery as well. They recently purchased a company to deliver alcohol. There's so much this company is trying to do, and I think a one-stop shop app for all these services to make it easy for consumers is going to be big. And here they just show some stats, kind of showcasing what they are made of, really. Out of the 10 most downloaded travel apps in 2020, no one was really traveling, but Uber was up there. You can see Lyft, their competitor really in the US, number 9, so quite far behind. And right here you can see with the food deliveries, again, Uber number 1, with a lot of other well-known apps in here, but their biggest competitor really being DoorDash, and Uber is still ahead here. So, both parts of the business that they're really, really doubling down on right now is growing well, but don't sleep on that freight part of their business. So here I just want to quickly show you guys a little piece of their delivery part of the business, because we all know the rides part by now. That's kind of their core bread and butter, but delivery has really picked up in 2020. It's kind of a gift, if you will. They had to suffer short term with rides, but delivery has now just taken off. And you can see from these charts here how delivery has really exponentially grown over time, and how the mobility part of their business, the rides part, is still growing quite well. But this is just kind of separated. They were kind of going parallel, and then after last year, they just kind of took their own way, and this has just been running to the moon. So very exciting stuff here for Uber. I just want to scroll down here to the next part on here, which is freight. And right now, this is only 2% of their gross bookings, but I suspect over the next few years, this will grow like 4%, 6%, 8%, and it'll soon become a double-digit part of their gross bookings. And that's when I think the media will finally, Wall Street will finally say, oh, this is something we should pay attention to. And I think that could lead to another big run in the stock, because it's like, okay, they got Eats down packed, they got rides down packed, they're making money from these businesses. What's next for Uber? Oh, great. Oh, this thing's been growing really nicely over the years. This has a huge market potential. Like we saw, the TAM is massive. Hey, maybe this is the next growth driver to actually have Uber 10x. And I think this is something that, like I said, most people are sleeping on right now. Now, the other thing that you may not know about Uber is that they actually have some investment stakes in other delivery type apps around the world. So Didi here, which is a popular similar app to Uber, the rides, massive in China. They have 15% stake there. Grab, again, a very similar app, but it's now in terms of like pretty much on-demand ride hailing, as well as food delivery. Southeast Asia, this is big. They have a 16% stake, and then you can see a few others like Lime. I've personally used this as well. I believe it was in Paris that I used this. 23% stake in that. So Uber's kind of, they see a lot of these opportunities, and they're like, I'm just gonna dabble a little bit here, dabble a little bit there, and some of these pay off, and then some companies are like, we're just gonna straight out buy them, like Postmates, and that recent company they bought for alcohol delivery. And this strategy has been working really, really well for them. So overall, my thoughts on Uber's earnings: does it deserve to be down 4%? Maybe, if you're kind of short-term focused, which the market is for the most part with these day-to-day movements. It wasn't like a stellar earnings report. There was still quite a bit of disappointment in there for the short term. But like I said, if you're looking long term, you're looking at freight, you're looking at the other parts of their business really coming back strong at the end of this year, going into next year, things open back up. After listening to their earnings call, a few other things I got from that was that in Brazil, for example, they have, I think, 90% of their revenue back. It's pretty much recovered for the rides part of their business, but they still don't have 30% of their core audience back. Their core customers are still not using the app right now because they're probably working from home, or they don't really want to travel right now. So all this means is that when that 30% core rider base comes back, it's just going to add fuel to the fire, because you already have a whole new set of customers that have adopted this platform now, and it's just going to hit new highs, new records for the company, massive growth ahead. I think this is going to be a growth machine for many, many years to come. And I know a lot of people are afraid of, robo taxis coming in and eating Uber's lunch, but trust me, guys, that is a while away. Let Tesla first release full self-driving for their customers, which will probably take a little bit of time to have that widely available. And then we can worry about it actually being a car that drives itself, and government regulations and all that kind of stuff. So I think that's, at least in my opinion, 3 to 5 years away from becoming even somewhat of a threat to Uber. So for now, clear skies. Uber is recovering well. I'm happy with this. I'm happy with the performance recently. No plans to sell this stock, and I'm just going to let this thing keep winning over time. Either way, guys, thank you so much for watching. Hope you enjoyed this video. Let me know your thoughts on Uber in the comments down below. But either way, don't forget to invest positively, and I'll see you in the next one. Peace.